Our next guest says that we are still in a secular bull market, and she still thinks the S&P, we use still twice in the same sentence, can test the highs of 4,800, but not without some pain. For what she's buying here and what she expects to break out, let's bring in Bartels, Chief Investment Strategist at Sanctuary Wealth. You're bullish, and you think 4,800. Did you have a bullish target at the beginning of the year, Marianne? Because I haven't been giving you credit.
Well, we generally don't have targets. But what we said coming into the year, because we had looked at the monthly stochastic, that we thought we would get the best buying opportunity in the market this year since 2008 and 2009. We did say that. Okay.
On previous appearances, when I would ask you that you thought the October lows weren't going to be retested, you thought that a lot of people thought 4,200 was going to be a really difficult upper end of a range to get out of before retesting the lows and seeing some type of final, throwing in the towel or capitulation, and that never happened. You were always in the camp that we're going higher. When did you pick 4,800?
When we finally broke out of resistance around 4,200, that gave us the all clear that you're going to go up and test the highs, which are near 4,800 on the S&P.
And is this going to be near term? Is the CPI number, in Tom Lee's view, is that going to be so cool that we see this start this week, start our move? You think by the end of the year, I mean, that's still a pretty good move. That's about 10% more, isn't it? Maybe a little bit less.
It is. And, obviously, Joe, we had fireworks for the first half of the year. I mean, we had tremendous gains in the S&P and the NASDAQ. We've been in a consolidation phase right now. You can still get a 5 to 10% pullback. But even if we do that in July, I still think we can rally up into August, have our seasonal correction in the fall, and still have a great year-end rally. Remember, this is the third year of the presidential cycle. And when the first half of the year is really strong, that trend stays in place. And we think that trend will continue, and we're going to have pretty good gains this year, which, as you know, Joe, most people were not anticipating. So, you don't always want to run with the crowd.
You think if there is a correction, it would be tech, consumer discretionary, and you think cyclicals either way, you'd buy them?
Yes, and the cyclicals that we're looking at right now that we're buying, we think are the industrials. We're watching this space very closely. They're already at 52-week highs, but if you can really break out, get new highs and hold that, that's going to be a multi-year breakout, and that's going to be a signal that the markets can continue to rally. Another thing that we're watching is Apple. Apple is an important stock. It had an important breakout. We think it's pulling back here and is testing the breakout. It could pull back around 178, 180. But if Apple stays in a broken out state, that's another positive sign for the market. So although we can get a correction, in tech and get a correction in consumer discretionary, we think you should be buying this correction, not selling the correction.
The yield curve, you think that the highs are in? It looked like they were going to try and challenge it after last week, but that kind of faded quickly, but not to say that we couldn't go back up with a hot number on Wednesday.
Yeah, when we look at interest rates, I think what's really important, Joe, is we're looking at the 2-year Treasury yield. And that hit a new high, but couldn't hold it last Thursday. And we're getting what's called negative divergences. And that means that the likelihood is that rates on the 2-year are going down. We still think rates at the 2-year and the 10-year are in a topping process. And if that's correct, that can actually be bullish for the markets. And another confirmation that rates are likely peaking is if you look at the US dollar, that hasn't rallied as rates tried to rally. So I definitely feel that rates are in a peaking process and can actually come down a little bit. And that would actually be positive for the markets as well.
So what should I do with Apple? Where should I buy it?
Oh, so the technical level that we're looking at on a pullback is around 178, 180.
Okay, it's 188 today. It's been as high as 194. You think it's got room to run once we get through this consolidation, though?
That's correct, because you had a 1-year breakout in the stock. This is significant, Joe, to have, the largest stock in the market have a 1-year breakout on a technical basis is really significant. And I don't think the market is paying attention to this enough, because I think it's a leader within the market and it's telling you the direction that the market is going.